This is what the interior of the most expensive semi that has sold in East York looks like. I'm pretty sure it's the most expensive 22-footer semi at the very least. Sold for over $2 million. Now, obviously, this thing was renovated to the nines. And this is your quintessential HGTV renovation that very much on trend right now. It probably appeals to 9 out of 10 people, if not 10 out of 10 people that are walking through. The price obviously reflects that. There's a lot to unpack in this story. Obviously, you have something like this setting records, but what is the rest of the market doing? And we're going to get into that. We're going to talk about detached, semis, towns, and condos. The market is showing signs of improvement, but it is very much all over the place. So there is no consensus if actually things are improving or if it's just a one-off month where things are looking better, where the short term is probably not going to be that good. So let's see. So for those of you following the channel, you already knew that in October we're going to have a price appreciation, and in November we're possibly going to see a little bit more of a bump. However, that just shows we're back to seasonal trends. However, we're still very far off from the massive drop we've had since the spring market where we lost majority of the gains. I'm still calling for what's going to be a relatively flat year, but you never know. There is one variable that is changing right now, and that is sales absorption. There's a lot more stuff that is actually starting to move off the shelves. Sales, sold conditionals, it's picking up. You're going to see in the next slide, but prices are creeping up a little bit. However, once you break it down by area and property type, you're kind of going to see that there are two stories unfolding. There's obviously the old age story of condos versus detached, and that is shifting. It seems like right now, cheaper properties are basically where most of the action is right now, and things on the higher end are a little bit slower to move. But we're going to get to that in a second. Still calling for November a flat or possibly a higher price in November, and then we're going to see the typical seasonal decrease going into December. So when it comes to detached, this column right here represents the September median price, and the column right here to the left is the October median price. And here's what I mean, that it's very difficult to draw consensus in terms of what is actually happening on trend, because you will notice there's a lot of overperforming and underperforming across all areas of the GTA, but there are some trends that are emerging. So for example, in the West, Burlington and Oakville are lagging substantially. So technically they should have had their prices appreciate, the median prices appreciate, but they have not. So Halton region as well as Peel region have dropped. The city of Toronto, the story is pretty much the same. Central Toronto and Toronto East have gone up, especially Toronto Central. The prices have substantially increased, median prices. And Toronto West has been lagging. So as you can see, Toronto West went from 1.28 last month to 1.225 this month. And it just kind of keeps going down the list. Like you'll look in York region, you will see big discrepancies between Markham, Richmond Hill, but then you'll see something like King, where the median price popped off going to 2.4 million from last month being 1.6. Now, again, this is more of a sales mix where we're just probably selling bigger mansions in King City than we typically do for the month of October, which is what's skewing things up. But again, York region is not doing that well. In general, I would call this a pretty flat market for detached. So then you're thinking to yourself, well, how is it that median prices are up in the prior slide? Well, what's doing well are cheaper properties. So your semi-detached, your townhouses, they're up. And the bigger story that's unfolding right now is condos. While prices are flat, there's been a lot of absorption in condos. So they have been selling well. Prices are up a little bit, and that is helping basically drive the prices up across the GTA for the GTA median price. Now, here's back to that semi that set the record in East York for over $2 million. This is what it looks like on the outside. Now, what's interesting here is that Central Toronto and Toronto East, especially East York, Riverdale, Leslieville, generally they're somewhat recession-proof in the sense that good product moves. It doesn't matter if it's slow market, bad market, whatever market. There's still a ton of buyers out there, especially for turnkey properties like these. And this is kind of the case study for that. I'm personally surprised what it sold for, but it was a really nice renovation. It is a nice property, so there was a lot of competition. So obviously there was a lot of desire for this, and it maybe also speaks to the fact that there's very little similar product out there with a lot of buyers that want this type of product. So flippers, if you're paying attention, this is maybe the spot to be looking at. Now, one thing that's very interesting is during the summer, the East was slow like everywhere else. And we've seen a little bit of an improvement in September like we usually do. But this beat my own personal expectations. I don't know if it's a sign of what's to come. I doubt it. I think this is a one-off. But let's see, and let's take a look at the rest of the stats. And here's where the good news story starts for the market at large. First of all, new listings. They went right back to seasonal norms, tapered off completely from the peak we had in September. So they're coming down more aggressively than they should be. And obviously we're still above where we should be, but the trend line is actually more aggressive than seasonal. But this is the good news story. Actual active buyers. This is where things get interesting. We had a massive uptick of people actually selling, buying, going conditional, going firm, whatever the case may be. We've actually transacted a lot more in the month of October, and I have a feeling this is going to continue into the month of November, where, dare I say, we might actually get to seasonal norms. Now, that doesn't mean the market's back because active listings are still higher, but for us to have this course correction in the amount of properties that have sold is pretty substantial. Now, a lot of this comes from the condo market. I mean, I bought 3 condo units last month alone. So I have contributed to 3 of these 6,658 units. So that's great. So things are moving in the right direction. At least there's some liquidity that's coming. But again, if I was a seller of a condo right now, I would probably be holding off unless you have an absolute banger of a product, something that's corner lot, beautiful building, great status certificate, ton of money in the reserve fund, no issues, like the unicorn stuff. Anything besides that, like an interior corner unit, something next to the elevator, next to the garbage chute, something overlooking a parkade. At this point, I wouldn't bother unless you're ready to take a below market haircut. You are going to be selling below market value because even though things have picked up for condos, you have to understand we're coming from some of the lowest and slowest condo market that we have seen in a long time. So for those of you with listings currently in the market right now, generally I would think by November things start slowing down, but I feel maybe at this point in time, the market is actually going to continue further into November, potentially until the end of November, where we're still going to have a few weeks left of buyers actually making decent offers, or at least offers in general, giving people an out rather than having to terminate and then relist in the spring. Undeniably, active inventory is still higher. Again, remember, a lot of this has to do with condos. So condos are skewing the market up in terms of inventory. A lot of people were saying just a month ago or a month and a half ago that this October, this November, we're going to hit the highest inventory levels ever. We're going to crack 26,000 available units for sale. And I think we may have at one point during October, I'm not sure, but ultimately we have to usually just look at what happens at the end of each month for consistency. And as you can see, active inventory is actually 24,000, so 24,500, let's call it. 2 things obviously happened. Absorption was higher, so we sold 1,500 more properties than we would have based on the trend line we were going at, which was very low, let's say 5,000 properties per month. So we sold higher than that. That helped with absorption, and then we had new listings go down substantially and continuing to follow seasonal trend, which I believe next month, again, we're going to have very few new listings. We're probably going to have a bunch of relists and the same stuff that's been sitting on the market where people need to sell. They're going to keep it on. But by the end of November, I believe a lot of people are going to start terminating and preparing for the spring market. Now, what's interesting this year is that for the last 2 to 3 years, ever since COVID, really, our spring market, which would usually start, let's say, in April, has been pulled forward. Sometimes it starts in January, February. So I think this year we're going to see something similar. We're going to have a quiet December, most likely. January may be quiet. Usually the first 60 days of the year are very predictive of what happens for the rest of the spring market. This year, I suspect a lot of the properties that didn't sell this year or that are about to terminate are going to list probably tail end of January, early February. I don't think people are going to be waiting until May, especially if we have another jumbo rate cut like we just did. That may spur it. I've been saying for a long time, interest rates are not making a difference. But this last one was a big one. And again, I don't know if it's the catalyst, but it definitely helped, I think, with affordability because mortgages have obviously dropped. Affordability, monthly payments have also dropped. So people's purchasing power has increased or, finally they can get the property that they want within their budget. So that's it for this month. There's good news. Things are improving. We're stabilizing. I think we're scraping the bottom of the market at this point. At least that's what I think based on the data, but we'll see. So I'll see you in the next one.